Alright, I'm re-recording this because I watched the last video and it sounded like I got Asperger's and I just sound like fucking retarded. I'm gonna take this from the top. So you had this trade right here and you marked out this SMT between here. And I'm not sure if you also correlated this with YM, but it is very much so correlated with ES. So personally to me, this is far from the most blatant SMT I've seen. When I look at SMT, I am mainly from here to here. When I look at SMT, I am very much so looking at the pivot points. So if you look at the line chart, I am looking for the major swing highs, swings lows, if that makes sense. I'm not saying this is invalid, but I'd be mainly looking for like things from here to here. Either way, you're not wrong. And if you're looking at microstructure, you are going to be inherently correct. I just preferably kind of like something a little bit more cleaner. So we had that SMT here, and then you shorted. I'm not really sure what you shorted off of. Either it was this order block, or, I mean, in theory, this would be an order block if we were in a downtrend, but this is a little bit of a mess. And the reason this is a little bit of a mess is because we are in a very, very, very big high volume node. But I'll give you the context as to why this worked. So you took the short off of this, which is either the 3-minute, I believe 3-minute. Yeah, that's a 3-minute. It's either a 3-minute CISD right here. Yeah, 3-minute CISD or some sort of order block that I just cannot seem to understand because it is very, very convoluted here. You'd have to have like a 50-point stop loss for this, and you definitely want to be taking this on micros unless you're balling out and you can afford minis, which I'm very far from. Personally, I understand this is happening in a... Oh, this is not happening in a macro. I understand that you're trading quarterly theory, though. And you're saying that there is MCSMT, which I'm going to be so for real with you, gang. I don't know what the fuck that is. I do understand that quarterly theory, certain things are valid, and certain quarters can be connected to other, or can be related to other quarters, and then certain quarters will be invalid if they're related to certain quarters. It's got to be like one left to right, whatever. I don't really care. The main context from what I see is that you're trading in an area of very, very high consolidation, and it was slightly of a risky play because you were trading within the high volume node. And then also, here's the major aspect of it. If you take the range, you are very, very much so, and I'll take the other portion of the range, but if you take the range, you are very, very much so not trading within the premium. You want to kind of take, or you want to be looking at shorts within premium, above the 0.5 and not really below. And also if, you want to be a little bit, this is arguably the most logical place you take the range, but if you want to take like this range or whatever, you're still very much so taking trades in discount, or taking shorts and discount, when really you should be looking above around this general location because you'd have less room for a stop out. Either way, I understand that you're taking continuations and you're kind of just shotgunning something. I think the reason why you won this trade is because yeah, you can account for the SMT, but really what I'm looking at is I'm looking at this 10 a.m. We're opening the 10 a.m. and then we're using it to push lower. And then if you want to look at the actual real technical reason as to why, we are inside this high volume node that we are just consolidating in. As you can see, we tried to break out of it. We couldn't. Right here, you got an entry, and we broke out came back into here and rejected basically off this ledge. I know this is very, very intuitional and not very blatant here, but we came back, we retested this, and then we pushed lower. And the reason we dumped so violently was because we pushed lower. We tested this, rejected off of it, and then we pushed lower through this low volume node that we completely disrespected to go test this ledge right here. And as we reacted off that, we settled right here. So the main idea is that you basically traded the break and retest of this very, very tight range. And I would just next time consider try to trade in places where it's a little less choppy, and you can kind of visualize that even without using volume profile. You can visualize that by using the idea of premium and discount, right? So next time, you wouldn't have had this. Next time, really consider trying to take trades within these extremes, either taking longs here or shorts here, because that inherently is going to lower the probability that you take things within high volume nodes, right? Areas where it's a little bit less probable to catch a expansion. Instead, there's usually consolidation within those zones. Now, I know I trade a little bit differently, and I have limits somewhere else, and that's why I'm making this video, because I have the time. But I wanted to give you an example of how you could use the idea of premium and discount. So I was looking at this level, but that's not inherently what played out today. So I understand you're trading quarterly theory, but macros is also a valid way to analyze the time aspect of the market. So understand that macros are basically from the 50 to the 10 mark in every hour of the New York session. So from here to here, to here. This is our macro. And within this macro, understand that we use these to get rid of all the noise around it and to classify it as a move within itself, kind of like you do AMDX and quarterly theory. So we open this macro right here, right? And everyone uses their own confluences and their own patterns. But I just wanted to point this out because it's very, very similar to a fair value gap. So we have this gap right here, this IFVG that we inverse, and the reason this is a high quality IFVG is because we take these highs, liquidity, and this actually rejects off an end dog, which within itself you can classify as a structural confluence, right? Why is this valid? Well, because it reacts off this and this. And if you go on the lower time frames, you'll see that actually the rejection is a wick that you could have shorted off of right here. You kind of want to be at a weird time frame, but yeah. Anyways, that's why this is valid. And if you go on the 5-minute time frame, you see that we reject right off this gap fill, and we understand why this gap fill is higher probability because in the process of making it, we used it to clear a significant level, invert it, and we rejected off something kind of similar to star plat, looking at the way we react off something and entry triggering off of that. This is a trade I more likely would have taken because of that, and also due to the fact that on this lower time frame range, we are in, if you see, a premium zone, more probable to take shorts. And like I brushed up before, when you're in these extrematories of a range, you are more likely to be trading within a ledge of a low vol a ledge between a high volume and a low volume node. If I take volume profile of the last completed auction, you can see right here, and I will replay to show that this isn't just hindsight data. You will see that because we are trading within this premium right here, we are inherently going to be trading within an area where there's likely to be a ledge like this. And it just so happened that this 5-minute full gap fill, it's going to look different because TradingView is slightly off with their volume data. It's tick stream. This full gap fill right here falls within the very, very ledge of this high volume node, which is the extrematory of the bell curve. You're validating the pattern of what usually happens when we enter premium and discount with actual historical consensus of premium and discount, if that makes sense. So really the whole video that I'm making here is to just emphasize how important premium and discount is. And as you can see, we enter this macro. I understand you use time-based narrative. That's why I wanted to relate to you by using macros, which is also a time-based narrative. And now you can classify this macro as a spooling macro. I just wanted to contrast your example with an example that I just see first thing on the chart. Just focus on premium and discount, and then the rest of the context gets a little bit more confusing, but premium and discount is a great standard issue or standard basis to grade and classify your trades. It'll keep you more patient because you will be trading in optimal areas where you will experience a lot less drawdown because you're trading at an extrematory. Hope that makes sense. It is 12 minutes I've been yapping for. So I don't know. I hope that helps. I hope I don't sound like I have Asperger's or autism.